So good afternoon, everyone. It's an honor to be here. My name is Kola Aina, a partner at Ventures Platform Fund. I've been asked to talk over the next 10 minutes about a topic that you can spend a whole semester at Oxford University discussing, the cost of capital for Africa, particularly in a fast-evolving age of global uncertainty. And so, in thinking about exploring this topic in 10 minutes, I figured I would overwhelm you with some facts and a few anecdotes that describes the scale of the challenge we face as a continent, but also explores a few potential solutions that we might take on. It's good to have a bunch of friends in the room, so I feel very comfortable here today. 50 to 75%. That is the low end of the valuation discount, or call it an Africa discount, that a fast-growing portfolio company of ours, a highly regarded company, a company with so much headroom and potential, had to accept in a financing round in 2025. The low end. So if this same company was in a different market that wasn't on the African continent, they would have raised money at 2 times the valuation, maybe 3. I felt this because I was on the other side of this transaction. The reality is that there is an unjust Africa discount. Okay, good. Africa bears a risk premium, but much of it is driven by perception. Unfortunately, in Africa, they say when 2 crazy people are fighting, you have to step aside because you would get punched before you explain. So as much as this risk premium is perceived, it has real impact. I need to go back to the next slide. If you can just click for me, that might just make it easier because the clicker's not working and it's affecting my flow. No, the last slide. The last slide before this, thank you. The impact of this risk premium sits at about $80 billion. But if you actually look at the data, Africa's loss ratio is less than 2%. Compare that with Latin America, that sits at 13%, or Eastern Europe at 10%. If you don't believe me, I'm sure you believe Mr. Femi Adesina, the president of the AFDB. These are his statistics. And so, next slide. Now, that is further compounded by the fact that less than 1% of global venture capital flows to Africa. So not only is there an unfair risk premium, there is also an undersupply of capital. Now, Africa receives less than 1% of global venture funding, but the GDP growth rate is projected to outpace the rest of the world. Now, you can kind of explain why this is so, because 80% of capital flows to venture capital in Africa come from the rest of the world. And so we are at the mercy of what global capital sources think and feel. Next slide. But is this a fair sort of disposition? Since 2015, when the African venture capital ecosystem really took off, we have seen lots of progress. Modest, but some progress. In that time, we've had 10 exits in excess of $100 million. We've had 9 unicorns from Lagos to Cairo. But I think most exciting for me is that we are starting to see the emergence of a new crop of African companies with original African innovations that are becoming global companies. A few months ago, I was in San Francisco, and I wanted to be cheeky and try a Waymo. And I got in a Waymo, and I was going for a meeting. I was able to practice my lines before I got to my meeting in my own private space, without realizing that Waymo is powered by a little company started from Lagos called Move. Yes. That's the surprise you get when you underestimate the power of African innovation. Or a portfolio company called Lemfi, one of our portfolio companies, started in Lagos by one of the early employees at OPay, that's now powering remittance in places like Bangladesh, India, and Pakistan. We're also seeing lots of recycling of capital. At Ventures Platform, we've had the good fortune of returning 4 out of 7 vintages from secondary exits. So the ecosystem is maturing, and I believe deserves a lot more credit. Now, let's take a step back. So my organization, Ventures Platform, was founded in 2016. So, when you wonder why I lost all my hair, it's because I used to have lots of hair. And my family's in the audience, so they can bear me witness. But it's because I've lived through this time scale. I called it a decade of progressive change. I was thinking about something more adventurous. I was going to call it a decade of VUCA. The business students in the audience know what I mean. So we started off in 2015 with the build-up of momentum. There was a lot of promise about what the future could hold for the African VC ecosystem. In 2016, the first African company got accepted into Y Combinator. That company is now known as Paystack, one of my favorite portfolio companies. So 2016, we saw a ramp up, and then the pandemic hit in 2020. And right after that, we saw an acceleration in the flow of funding into the continent. Most of that powered by ZERP. You literally would close a financing round in a week over WhatsApp. No DD, right? Not very good. Post that, you saw a massive fall in 2023 with the pullback of foreign venture capital, post-ZERP. And then we had our internal issues in Nigeria, in Egypt, in Kenya with foreign exchange, which really meant the continent was too risky to touch. In 2025, we saw stabilization. Nigeria implemented FX reforms and subsidy reforms, and that really helped bolster confidence. We've had close to 18 months of stable foreign exchange, and Francophone West Africa is looking sexier than ever because they're pegged to the CFA. We just opened an office there, by the way, so we're very bullish on that region. But where are we today? 2026, we're in March. The sense I get and the sense we get is across the world, AI is sucking all the energy. So it's really hard to get anyone's attention if your pitch deck does not have, hey, how are you? Good to see you. If your pitch deck doesn't have AI in it, this is how I get distracted all the time when I see good people in the audience. Doesn't have AI in it. I thought it was important to sort of look back at the time scale to get a sense for how dependent our ecosystem is on external factors. I lost like 3 minutes on the clicker, so I'm going to try to run through it. So let's go a little deeper. So today, in 2025, 61% of all venture dollars went to AI companies globally. But I think a more interesting trend is 2 times the number of companies in 24 got to $10 million in ARR in 3 months. Now, the challenge with this is that if you're building a company in Africa that can't get to that level of scale, it's really hard to attract capital. And so the price of capital goes up, right? And Abi was talking about rubbish problems, or there's a phrase he used, and I think his first example was AI for Africa, right? I mean, I hold a different view, but the point here is we are benchmarked against really unfair benchmarks that are not relevant to the African reality. That's the cost of capital we're talking about there. We're also seeing a trend where more and more countries are becoming more nationalistic and looking internally. 2 years ago, if you were an African VC fund, you were likely talking to DFC, for instance. Well, good luck getting a reply to your email today, right? And so, as the world evolves and as countries close their borders, as globalization becomes threatened, Africa could very well be at risk. And the cost of capital would trend in the wrong direction. More recently, we've had an invasion in Iran. And all of the gains we were making in terms of the recovery from inflation might just head in the other direction. Unfortunately, what tends to happen is as you have a rise in inflation, rates go up, and as rates go up, venture capital looks less and less sexy. So the reality is that we are potentially entering an era where the cost of capital for Africa in general and VC in general would go up if we don't do something about it. Remember, we're very dependent on foreign funding. 42% of all capital in 2024 that flowed into Africa came from DFIs. That can't go on forever. DFIs play a critical role. They're catalytic, they help build ecosystems, but we have to think about the transition. And so, what does all of this mean? Now, there are two trends that we are observing that I just wanted to highlight very quickly. Between 2024 and 2025, we saw a gradual reduction in the flow of funding to high growth, later stage companies. Right? So you can see there, deal sizes between 20 and 50 million dipped by 8%. Similarly, you saw a slight dip in sort of, super growth at 50 million and beyond. And you're seeing all of the activity in the middle, effectively seed, folks just kind of balancing and hedging risk a little bit. This is really challenging. Someone has to take more risk, right? And if the internationals, if the US fund, the global funds won't take the risk, then we have to perhaps look inwards. This is also quite troubling, right? Because it means that there is the pricing of capital for the early stage where you have experimentation has gone up. So the angels in the room, you guys have to do a lot more. I once used to be an angel, so I'm a little ashamed to say. This is the other trend we noticed. There's been a massive rise in the volume of debt financing, and I think that speaks to two things. It speaks to the maturity of the ecosystem, but also the fact that folks are struggling to raise equity and they're turning to debt. As I close, so what might we do? This is a really wicked problem, and I don't have the answers, but I have a few ideas. The first idea is that I think as an ecosystem, as much as I agree that the risk premium is really about perception, we have to stay focused on moving from potential to performance, right? Because performance attracts capital, which fuels innovation and then drives. It's a very virtuous cycle that we have to keep going. And then that means we have to build particular kinds of companies, great, healthy unit economics, capital efficiency, and scale. Thinking about expansion of TAM. Are there other emerging markets that are similar to the markets where you operate, where you can scale to, so you sort of dilute the Africa discount? We really have to think about how we get more corporates on the table to do M&A, but also figuring out how we unlock liquidity through local exchanges. Abby was on the stage earlier. I know they're doing some work here, but this is work that we all have to do together. We talked about this earlier. How do we unlock deep pools of local capital to replace the missing capital from global venture and the West? And finally, and I think perhaps most importantly, we have to tell better stories. There's way too much negative noise on Twitter and Facebook and LinkedIn from Africans. And it does make capital get more costly. Thank you very much.